particular, let's put the spotlight on the yellow metal then. We have seen a lot of volatility of late, especially because of rising concerns in West Asia. We saw a spike come in as far as gold prices are concerned, but after that they've cooled off as geopolitical tensions continue to de-escalate. But what impact has the volatility in gold prices had on demand? To discuss exactly this, we now have Mr. Sachin Jain, Regional CEO India at World Gold Council, now joining us. Mr. Jain, thank you so much for taking your time out and joining us here on ET Now. First up, tell us what has the impact on demand been back home, especially consumption demand. We'll talk about investment-led demand in just a bit, but consumption demand with gold now trading near 98,000 on MCX. What has demand trends been back home?
Thank you. Thanks for having me on the platform. It's an honor to be here. As you said, let's talk about first the consumption side on the jewelry front. In quarter 1 of 2025, we saw a 24% dip in terms of demand, and it was clearly because the price of gold went up and did not give a breather to the consumer to start consuming. And that was one of the things we saw. As we got into quarter 2, we have seen that the demand compared to quarter 2 demand of last year, consumers are back. The price that went down from 100,000 plus to about 93, 94, got a lot of consumers back. Also, right now, it's been, this whole volatility is still restricting the consumers to come and buy freely. So as we believe that in the coming phase, there'll be slightly more stability in the price of gold, that's when we believe the consumer of jewelry will be back into the stores in that same force as we've seen before.
Understood. So what is the sense that you're getting from consumers on ground? Are they waiting on the sidelines in anticipation of fall in prices? And do you expect demand to come back if at all prices were to fall by about 4 to 5% in the next few months?
Well, demand's already up. It's like a small percentage of consumers are sort of standing on the fence. But in terms of we've done a consumer survey where almost the obsession of the consumer on gold is very, very high and very, very strong. So I think from that perspective, compared to jewelry and compared to the investment demand, particularly on physical product, is already happening and will continue to grow.
Understood. So that's as far as investment demand is concerned. But what about Reserve Bank of India buying gold? Several reasons. One of the reasons of the surge in gold prices that we have seen over the last 2 years is on account of purchases that were being made by central banks globally, including the Reserve Bank of India. How do you expect that trend to shape up going forward? And do you expect central banks buying to continue for the rest of this calendar year?
Well, we just completed a global central bank survey, and what's come out is that about 70% plus of the emerging market central banks have estimated that they will continue to buy in 2025, and also their outlook for the next 4 to 5 years continues to be very positive on gold buying and their intent that they'll increase their reserves. So I think that's the trend that we picked up, not just for the next few months, but for the next 4 to 5 years from emerging central banks. The more established markets, they've also given a positive indication of what they will look at gold. Now, to your question around what should happen in the next few months, particularly in India, I foresee that the reserve level of the Reserve Bank of India should certainly go up. To what level, we really can't say, but the indication seems that they will continue the buying.
Expect Reserve Bank of India to continue to buy gold, and reserve levels are expected to inch higher going forward. But I also wanted your thoughts, Mr. Jain, on ETF inflows, especially because of the kind of outflows that we have seen in the month of May, and this was the first outflow since last November. How do you expect this trend going forward, especially because of the kind of volatility that we are seeing in gold prices? Do you expect the month of June also to report outflows as far as gold ETFs are concerned?
Well, I think I wouldn't be able to give you what will happen, particularly in June, but I certainly say that by end of this year, the AUM on what you see in India on ETF will certainly be much significantly higher. And that's purely about, one, that the confidence on ETF, the availability, the suppliers, and also the awareness of ETF as an asset class is growing. Profit booking is a function of ETF. We've always seen it historically whenever prices are volatile, they go up and down. There is some profit booking that happens. That's what we saw happened in the last month and some part of it this month. But I foresee that by end of this year, by end of 2025, the AUM will be significantly higher on gold ETFs.
You expect gold AUM to inch higher for the rest of the year, but back to the point that I was making with respect to demand back home. This year, because of early onset of monsoon and because weather forecasting agencies are expecting above normal rainfall, do you expect rural demand to inch higher, and what will the trend be when it comes to demand in rural versus urban demand?
Well, rural versus urban, we've seen that last year also about 35% of the consumption came from rural India, and not necessarily in geography was the rural, but also feeder markets. So big cities where rural consumer was buying. And last year the monsoon was very strong, and I think it continues to be stronger this year. Very interestingly, we also done some analysis on the rural consumer, where the rural consumer has been very price agnostic, and for them, gold is a function of saving and not necessarily about investment. And the difference is that as saving, you're agnostic and you're saying, if I have to invest, let's say 10,000 rupees a month or 5,000 rupees a month, I keep continually buying. So with that and higher monsoon and with more sort of investable money in the hands of the people, I foresee rural demand will continue to be robust.
So you expect rural demand to continue to be robust. That's the word coming in. Mr. Jain, thank you so much for taking your time out and joining us here on ET Now and helping us understand what the demand situation is looking like in the domestic gold market, especially because of the volatility that we have seen. But shifting focus from gold to the currency market then, uncertainties in US policies is pushing investors to diversify their portfolio and not be restricted to US assets. That's the word coming in from Khun Go of ANZ Group. He also talks about the future of the dollar. Listen into what he had to say.
Unpredictable nature of US policy making as we have witnessed in the last few months. So that has caused foreign investors to rethink whether or not they want to continue to have such a large allocation to US financial assets. And the answer overwhelmingly is they want to reduce that risk. And that's really the key reason why we've seen weakness in the dollar. The dollar will still be an important reserve currency. I think we are coming to a more normalized period where we're going to see probably further downward pressure on the dollar as global capital gets reallocated to other parts of the world. Global central banks have been behaving. It's quite clear that they themselves are also looking to diversify away from the US dollar. And gold, of course, is one of the ways that they can do that. We've seen a lot of central banks around the world, particularly those in emerging markets, increasing their gold reserves.
That's the view coming in on where the dollar is headed from here on. But let's put the spotlight on our next segment, Did You Know? And today let's take a walk down the memory lane to trace the incredible evolution of India's commodity markets. From ancient barters to sophisticated contracts, India's engagement with commodity trade has been nothing short of fascinating. Believe it or not, commodity trading in India dates back to the pre-600 CE era, with turmeric, pepper, ginger, silk, cotton, gems and metals actively traded back then as well. But the watershed moment came in 1875 with the setting up of the Bombay Cotton Trade Association, marking the beginning of organized commodity trading in the country. Soon after, in 1893, merchants and mill owners established the Bombay Cotton Exchange Limited, further institutionalizing the trade. And then came 1938, when the Commodity Trading Exchange was registered, laying the groundwork for structured trading in the oilseed complex. From spice routes to screen trades, the Indian commodity market has truly come a long way, evolving with time, but always rooted in history. That's all the time we have on this edition of Commodity Central, but don't go anywhere. Newsroom coming up on the other side.